During the past few years, Charlotte has ranked among the country's really strong apartment market performers. The question is whether that momentum can be maintained, especially when substantial deliveries are about to kick into higher gear. Welcome to Apartment Market Dynamics from MPF Research. I'm Greg Willett. Cameron McIntosh is here too.
Let's start our discussion of Charlotte's apartment market fundamentals with a look at occupancy. Today's rate is 95.5%. That's a hair under the national norm, but it's a healthy reading for a metro where lots of new product is moving through initial lease-up. Furthermore, occupancy in Charlotte has been sustained at the 95 to 96% level for the past 4.5 years or so, since the middle of 2012.
Cameron, you mentioned lots of product moving through initial lease-up, and Charlotte sure does have a lot of that. Annual completions have been running north of 5,000 units since late 2013. The 2016 delivery tally reached 7,065 units, translating to 4.5% inventory growth in a single year. Thus, it's been an impressive feat for demand to keep pace with completions and hold occupancy in good shape of late.
Annual rent growth for new leases in Charlotte has averaged around the 4% mark during recent years, though results haven't been especially consistent. While growth got above 6% a couple of times, at other points it was around 2%. Today's growth is in the middle of that range, hitting at 4.4%.
Pricing is up 4 to 5% across the Class A, Class B, and Class C segments. However, that overall rent growth of 4% in Class A units is perhaps a little misleading. Select suburbs experiencing moderate construction activity have double-digit Class A rent growth. On the other hand, there are Class A price cuts in the urban core where the delivery volume is huge. Also, the South Side's notable Ballantyne submarket is registering Class A rent loss.
Ongoing construction in Metro Charlotte stands at 12,372 units. That volume is down a bit from this cycle's earlier high, but scheduled delivery dates are bunched up for many of the properties on the way. That means that targeted completions in 2017 jumped to 8,936 units, up 26% from 2016's new supply volume.
With more product moving through initial lease-up, we think Charlotte apartment occupancy is likely to slip below 95% or so for the first time in a while. The overall rent growth outlook holds close to 4%, about in line with today's results. Still, it's going to be harder to push pricing for top-tier product, especially in construction-heavy submarkets like Uptown South End, Southwest Charlotte, and Huntersville.
Like the patterns seen in a lot of other apartment markets across the country, Charlotte's outlook is very healthy in the big picture, but not quite as robust as recent results. Thanks for joining us for Apartment Market Dynamics from MPF Research. I'm Cameron McIntosh, he's Greg Willett, and we hope you will tune in again next time.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.